I received this simple trading strategy from one of our subscribers. I want to test it with $100. Let's see what happened. Let's say you're searching for a simple trading strategy to grow your account. However, before risking your money, you'd want to test it in real market conditions, customize it, and make improvements using a single free tool in order to turn your strategy into a cash machine. This video will walk you through the entire journey from start to finish. If you appreciate this content, don't forget to hit the thumbs up button, and let's dive right in. In today's video, we'll review a simple strategy submitted by one of our viewers, Raymond12. We'll go through it, backtest it 100 times, and optimize it if needed. This video is for you if you have a trading strategy and are eager to determine its suitability for your hard-earned cash. This strategy relies on two technical indicators, which are the Moving Average Convergence Divergence, MACD, and the Average Directional Movement Index, ADX. By the way, I'm using a software called Forex Tester, which enables us to assess trading strategies in real market conditions, test and optimize them. It's designed to help you uncover strategies, pinpoint opportunities, and analyze assets with multiple features to elevate your trading journey to the next level. First, let's add the two indicators to the chart. The first one is MACD. Just go to the list of indicators, search for the indicator you need, and select MACD. Before adding it to the chart, let's adjust the settings. Use the following figures, 12, 26, and 9 for the MACD. Feel free to pause the video to copy these settings. In general, these are the default universal MACD settings. Once you're done, click on Apply and you should see the indicator added to the chart. Now, let's add in the second technical indicator. Head back to the list of indicators and select the ADX from the search results. We need to make one minor adjustment initially. Maintain the 14-period metric as it is, and just click on the Levels tab to ensure that 40 is enabled. There's no need to modify any other options. That's all we need for now. Just click on Apply. You should now see the two indicators added to your chart. Oh, and a quick reminder, we're using a 4-hour time frame as per the suggestion of Raymond12, the subscriber who submitted this strategy. Now, let's dive into it. We should initiate a buy position when both of the following conditions are met. When the MACD line crosses above the signal line while both lines are below the zero level. Our next step is to ensure that the ADX is above or around 40%. This signifies that there is enough buying pressure in the market to support the long decision. Once both conditions are met, we initiate the long position and target a minimum risk-to-reward ratio of 1:3, implying that for every dollar put at risk, we seek a minimum return of $3. Here, for example, we can observe a bullish MACD crossover, where the MACD line has recently crossed above the signal line, while both remain below the MACD zero level. This suggests the potential for an increase in upward momentum. On the ADX indicator side, we observe that the ADX line is above the 40 threshold, confirming the presence of a significant upward trend that supports buy entries. For additional confirmation, I always like to use price action, where you can seek out bullish candlestick patterns, like a bullish engulfing or a hammer candlestick. I won't do it this time, as it's not a part of the strategy we received. The stop loss can be determined in several ways, but the most effective approach is to use the last swing low or major support zones. In this case, we can observe that both conditions were met, resulting in a successful trade. Before we begin backtesting this strategy, let's explore the sell rules. When the MACD line crosses below the signal line while both lines are above the zero level, it suggests a potential shift in momentum toward a bearish direction. This bearish divergence often indicates a weakening trend in the price of the Forex pair, stock, or any financial instrument we're trading. This signal should also be supported by an ADX value above 40%. If both of these conditions align, we initiate a short position. When entering the trade, maintain a consistent risk-to-reward ratio. I recommend exiting a portion of the position as the price approaches the take profit and continuing to ride the downtrend. I typically use this strategy while trading the Euro USD due to its inherent bearish bias. However, the success of this approach depends on various factors, including fundamentals, market sentiment, and technical analysis. Now, let's begin backtesting our strategy for today. If you need more details about MACD and ADX being backtested separately, I'm going to leave the link to the two videos at the end. First, let's create a new project. Following that, we should specify the initial deposit amount, which I'll set at $100 to cater to the request of some of our subscribers, though you can input your preferred amount. To proceed, select the instrument you wish to trade. In this case, I'll opt for the Euro USD and choose the historical data starting from 2013. Please be aware that Forex Tester will need a few minutes to download the pair database, enabling you to backtest the strategy more quickly and without requiring an internet connection. Once you've completed the setup, your chart will be ready, and it will feature an initial balance of $100 for executing your trading strategy. The interface is not too different from MT4 or MT5, which makes the tool pretty easy to use. To initiate the backtesting process, click here, and the tool will begin simulating market price movements. As you await the market's entry signal, you can adjust the simulation speed to expedite the testing, or pause the process and move forward by pressing the spacebar. When it's time to place a trade, you can do this by clicking here. Furthermore, you have the flexibility to adjust the volume, set your take profit, and establish your stop loss. We can establish a fixed risk percentage. For example, if we select 2% for each trade, it means that we'll be risking $2 on every trade. Using the eyedropper tool, we can easily position the take profit and stop loss levels. Once you've confirmed your trade details, simply click Buy or Sell to execute the trade instantly. You'll then see your account balance adjust in response to market movements. Alright, let's begin backtesting this strategy. What's impressive is that Forex Tester offers an easy Forex builder tool for automated strategy backtesting, which requires a few clicks. Besides, you can create your strategy with a user-friendly drag-and-drop interface and tailor your backtesting preferences. Alternatively, you can explore their strategy library and experiment with one of the numerous available strategies. You can explore this tool for a trial period of up to 7 days. If you decide to continue your membership, you can take advantage of the promo code displayed on the screen. Don't forget to hit the thumbs up button if you'd like me to review the other features of this software or use it to review your favorite trading strategies, which you can freely submit at tstlife.com/submit. We've just completed backtesting this strategy. The trading strategy was tested over 7 years. It achieved an 83% growth in profit, which is interesting. However, it also had a high drawdown of 240.74%, which means significant losses were experienced at some points. Additionally, the win rate is relatively low at 36%, indicating more losses than wins, and it's worth noting that there were 10 consecutive losing trades, which can be concerning. The strategy's risk might not justify the effort, and it's important to carefully consider these factors before deciding to trade it. The advantage of this tool is that you can easily incorporate additional indicators into your chart to assess their impact on reducing losses. For example, by adding the 200-day moving average to the chart, we can potentially avoid certain trades. It's worth noting that this strategy might be more suitable for lower time frames and less effective on higher time frames due to the expenses associated with prolonged trades. Consider giving this video a thumbs up if you want me to make a part 2 where I test this strategy on lower time frame, and tell us in the comments section which time frame you think would work better. Don't forget to check out our other videos and subscribe so you won't miss any of our future videos. Happy trading!